Y'all ready? Where should we start this? Let's start with the money. Let's start with Chase. So Felton, talk to us, first of all, introduce yourself to the people, give them a little bit of your background.
Yeah, so Felton Ellington, I've been with Chase for just over a decade, 12 years, going on 13. I've been in home lending for 22 years. Love what I do. Originally from Detroit, relocated, brought my family here.
Detroit in the building today too? Okay.
Yeah, so
What up though?
yeah, what's happening? So I fell in love with the city, when I got here. Beautiful people. Came here with the mission to close a gap in the racial equity gap in home ownership. So that's why I'm here. And so we're here and we mean business.
Okay, I like that. You mean business. All right, so let's talk about Chase. Let's do a deep dive into your products, your processes. We need to know how our people here can get funded by your bank. All right.
Yeah.
So talk to us from a first-time home buyer perspective. What programs do you have, and what are the requirements for us to get approved?
Yeah, so we got a suite of products. But what I want to lean into today is talking about how people that look like us can attain home ownership in an easier way. How can we put you on a smoother path to home ownership, whether that means providing some assistance through our grant programs, whether it means financial literacy, education through that, but also we did a facelift on a lot of our products. And those products, because we realized that underwriting can be a hurdle, a tough hurdle to get over. And what people may not necessarily realize is that when we write and close a loan, we don't own that loan, we service that loan. But we got regulators like Fannie Mae and Freddie Mac, FHA, that we have to adhere to, right? And so while still practicing responsible lending, we thought about ways that we can make it easier. And so we've removed several what we call overlays.
What's an overlay?
An overlay could be, let's say, Fannie Mae requires 2 months worth of bank statements. We might ask you for 3 months, or we may have to do a deeper dive into certain types of trade lines that appear in your credit report, right? So what we've done is remove some of those, well, many of those overlays to make it a lot easier for you to be able to obtain a home. That's just one step of it. So we had to enhance our technology to make the process a little bit more smoother. And we also realized that there's a lot of ways that people would like to do business. And so we created a platform where you can go online, start the process that way through a really simple 10-minute process where you can complete some questions. It gets on our radar. We also have opportunities where you can do it the good old-fashioned way, sitting down and having a conversation with some of our loan officers. And I'm very proud to say that I put 16 people in branches in the south and west sides where we didn't have a presence before. So now you walk into a Chase Bank, you can see people that speak the language of home lending, which is something that you didn't see 2 years ago.
Love it, love it, love it. So, all right, so what's your minimum credit score? If we're a first-time home buyer, we're looking to get a conventional mortgage. And what specific programs do you guys have where we can probably get some closing cost assistance or down payment assistance with Chase? We need to know where the money at, bro. Come on.
So let me
Let us
answer
know,
that.
bro.
I'll
We need
answer that
the
reverse.
money, bro.
Yeah, so I'm gonna start with the money first. So every program that we have, everyone, there's a $5,000 grant that can be tied to it. Now the grant itself is tied to not your good name or not you specifically, it's tied to the property, right? And so what we focused on were the areas where people that look like us are looking to buy the most, right? So again, we're talking about our south sides, our west sides. I even dipped my toe in Indiana. I got parts in Milwaukee, but for the most part, we can punch in a zip code, a property address. 9 times out of 10, you got $5,000 coming on top of that, right? And that's gonna help you offset your out-of-pocket expenses. I talked to some of you about that outside at the booth. And so when we think about interest rates that are starting to trend up a little bit, the $5,000 can help pull that down. And what we've noticed is, although those interest rates have gone up, people are still buying houses, and they find that the payment, in most cases, is even more affordable than what they could be paying for rent, right? So the money is out there. We got that, and that's part of our $30 billion commitment. I'm part of that. So I'm here to help spearhead it and make sure that we do put that $1 billion commitment that we put our name on for the city of Chicago. It's going to go to families out here because the number that I'm trying to hit in my head is 3,000 over the next couple years. And over the last, like yesterday was my 2-year anniversary of being in the role that launched that project, right? So we've already helped literally hundreds of families become homeowners, and it's amazing. So,
Oh, love it, love it. So how can we use that 5,000? Because you said
down payment, closing costs. Just
can
think
you
of the
use it to buy down a rate?
Yeah, closing costs. Yeah.
Okay.
So think of it like whatever we're going to spend money on to get the mortgage, that $5,000 is credited towards that. But we can stack that. So we can stack it through a product, which is one of your questions. We have something we call a Dream Maker. So we name everything at Chase. The Dream Maker is a product where you can get in with 3% down, reduced mortgage insurance, FICO score to get in the door is 620, right? What I love about that product is if you go onto that product, you can take a 45-minute homebuyer education course online. You get a certificate. We get that certificate. We're going to put $500 on top of that $5,000. So now you're looking at $5,500, right? And then to make it even better, like we realize that there's a lot of real estate agents out here, right? So we try to work with the ones that do the best jobs and take good care of our clients. We have access to over 70 million clients across the country. So these real estate agents that we partner with, they're in the business for at least 2 years. They've done an amazing job for our clients in the past. And if you want to partner with one of them and we close that loan, you get another $1,000 once that loan is closed.
Wow.
Right?
So $6,500.
65, right?
Okay.
Gets better. So what if we get a contract and we need to close within 30 days, right? As long as everybody's playing nice together and we get that loan across the finish line, right, everybody's happy. But if we don't, and it's our fault, we own it, right? And if we don't close that loan on time, $5,000 goes in your pocket.
Damn. So hold on.
Let me clarify.
Yeah,
I want to clarify that.
All right.
So it's got to be our fault. Now, if you're holding on to your documentation, things are beyond our control. Appraisal, comes in low, or you may need to do some repairs.
So what's classified as your fault?
That's not our fault.
But what's your fault then?
Our fault?
Yeah.
Slow process.
Okay.
Right.
So how can we document that you're slow?
Right. Okay. So that's good. So when we send our documentation out, and part of the
we want to know, bro. We want all the money.
The interview, the conversation is talking about like, hey, what does this process look like? So expectations are set up front, right? So you know what you're going to need to bring to help us to move forward, right? You're going to know what the timelines are like, and with the way our systems are designed, it's real time. I could be sitting here on my cell phone right now and get a hit from my underwriter saying, hey, I need an updated pay stub, right? And it's going to tell you need to have it to us within 24 to 48 hours.
So, all right, lots to unpack with this one.
Yeah.
So you telling me we can get a total of almost, what's that, 11.5?
So
6,500 with all the other stuff you mentioned, but the 5K if you guys are slow.
Yeah, but let me tell you something.
Come on, bro.
Don't come to us on the premise that we're going to pay $5,000.
No, I'm just saying, we want to know.
Yeah, no, you're right.
Yeah.
But there's a reason why we put that out there. We put that out there because we understand there's a contract, right? We also understand that people need to get into their home and the seller needs to move on and everyone wants to be done with it. But in order for us to be able to do that, we had to have the right technology. We had to have the right people in place, the right products, all those things before we could stroke a check and say, here's $5,000. And I will tell you this, 98% of our business across the country is closing on time. But we will pay it if it's our fault.
Okay.
We will do it.
Talk your
We got
ish,
the money
Chase.
to do it.
Yeah,
So
Chase
our goal,
coming with it.
don't come to us thinking you're going to get $5,000 if we don't close on time. Because 98% of the time, we're going to close it.
We like that, because Chase is notoriously known to be slow. I'm just keeping it real.
Okay.
I
Let's
just got to
put it-
be honest. Sorry,
and
Nicole.
that's
I just got to
fair.
be
That's
honest here,
fair.
okay? Like, this is a real estate seminar.
Yeah.
So in the streets, the real estate streets, Chase is slow. But
Right.
we are happy to know that you guys are taking accountability
Right.
for the process and putting your money where your mouth is.
And we've been doing this. This is like for, man, I want to say about 5 years. Now, the amount has been steadily increasing. It started out at 1,000, then it went to 2,500. Now we landed on $5,000 just a few months ago.
We like $5,000.
I like $5,000 too. Yeah. Right. Yeah. I like the grant $5,000 first, though.
No, we love the grant. Look, guys, use every tool that's available to you. Chase has great products, great rates, and if you can use that money to buy down your interest rate, pay your closing costs, it's all worth it. All right, so let's go to you, Miss Athena. Let's talk about the OPRHC. I got to say that slow, right? Let's talk about this, Athena. What is this? What kind of programs that you guys have that can help out our home buyers here to buy real estate?
So, my name is Athena Williams, and for those of you who are from the West Side, I'm sure you're familiar with Oak Park. So, OPRHC is the Oak Park Regional Housing Center. And if you're from Austin, you're familiar with the Austin Laramie State Bank. So, we're the agency that's about to redevelop the Austin Laramie State Bank and build a 78-unit rental building. So it's Oak Park Regional Housing Center. Through Oak Park Regional Housing Center in Austin, we're located right there at Austin and Lake Street, and we provide full-service HUD-approved housing services. So we're the agency that our partners like Chase would send people to work with to improve your credit score, or we call ourselves a soft underwriting agency. Soft underwriting because once we pull your credit score, it's a soft hit, and we're able to sit with you, help you create an action plan, let you know what you need to do to get your credit straight. We work with you to fix your credit for free, and then we also share your credit through a third-party authorization with our partners at Chase to say, okay, what do we need to do to get this individual across the finish line to purchase a home? So our goal is to help people improve their credit scores, to get them ready for home ownership through financial education, credit debt management, in addition to helping people find additional down payment assistance. So on top of the down payment assistance that Chase offers, because we're a Chase partner, we can find other down payment assistance to stack on top of that. So where you might get $5,500 for Chase, depending on your income, we can probably get another $2,000 from another institution, another $500 to $1,000 from somewhere like the Federal Home Loan Bank, another up to $6,500 from IDA, a couple of the institutions. We've actually helped people stack up to $30,000 for down payment assistance.
Wow. Wow. That's amazing.
So, and we're actually, as a HUD agency, we're approved to do down payment assistance.
Interesting. So you can stack with their 5,500, stack up to 30,000. My question to you is, what is the process to go about getting approved for all these different grants, right?
So
because that could be a little tedious too, right?
Right. So that's one of the things we specialize in. So one of the things that differentiate us from groups like NHS, which we're all partners, Lucha, Spanish Coalition, we do a lot of hand-holding. We literally walk our clients through every step of the way. And we will find, according to the income, according to debt, we literally look and research and find the down payment assistance that works for that individual.
So give us 3 steps to go through your process that you can give our audience right here to be prepared when they come to see you.
Just want to buy a home.
Just want to buy a home.
If you want to buy a home, you call our office and ask to either participate in a workshop or meet with one of our counselors.
That's it? But
That's
so
it.
what steps can they take before they even call you guys, like to get prepared?
Before they call us, you would need to really gather, because we're like a mini underwriting. So we literally look at your bank statements, your income tax returns, your check stubs. We pull all that together and we do a financial assessment, a mortgage readiness assessment. So get your documents in order. And once you get your documents in orders with us, it's so much easier for us to call our contacts at Chase Moises, we work with Moises, to say, okay, we have a packet that's ready to go, and it goes so much quicker, then Chase don't have to worry about that $5,000.
Okay, you're working in cahoots, huh?
So it's about getting, it's really about getting your documents in order.
So you said mortgage readiness.
Mm-hmm.
Can you explain what mortgage readiness is?
Yes, so mortgage readiness is basically, we teach the client their debt to income and what that looks like as far as a mortgage and what the mortgage costs would be.
Okay. So can you break down what debt to income ratio is?
So it's been a while because I'm the executive director. I have a staff that does that.
Sure. It's like
It's been 5 years since I had to do that.
Talk
so.
your talk then. Okay. Go ahead.
So debt to income, basically how much you have spent, how much you owe compared to what your income is.
Okay.
And so right now, some of the lenders are going up to, I think we have a couple of lenders that go up to 56%. And let me say that we work with multiple lenders. So we are a Chase partner, but we work with multiple lenders.
We don't talk about other lenders on the Chase stage. Okay?
Chase, no, I'm a HUD agency, so I have to talk about at least three.
I'm okay with that.
Yeah, you'll get us both in trouble.
No, we're joking.
Yeah.
All right, so you work with multiple lenders, including Chase.
Of course.
Most of those programs you can go up to 56%, but how long does it take to get approved for these grants? Because sometimes grants, if you're in the open market and you're making offers, and if it's competitive, sometimes when sellers here or realtors here, you're getting grants and you're getting this, they don't want to take your offer, right? So how long does it take to get these grants approved?
So we like for clients to come through us first before they even go to the realtor or the lender so that we can get you ready. Sometimes if people have their documents in order and come to us and go through the steps, which include a home buyer workshop,
Okay.
or either a financial education workshop, and then meeting with the counselor for a minimum of 2 hours, we've had people do it in 30 days. But then sometimes it takes people a little longer, or people don't want to get their paperwork in order, or people want to try to do something quick, fast, in a hurry. You don't buy a $300,000 house quick, fast, in a hurry.
That's a fact. So what about income restriction? Because you said you have to meet certain income guidelines. So what are these income, is it family size? Like, how does it work? Is it area median income?
Right, so a lot of down payment assistance is dependent on area median income. And I shouldn't say a lot because we do have some partners that are not income tied, but most are 80% AMI. And 80% AMI right now for the city of Chicago for one person is approximately $58,000 a year salary.
Okay.
So any that or lower qualifies you for down payment assistance.
Okay. Anybody making $58,000 in this room? Are y'all scared to tell your salary?
Well, and then I'll say this.
Okay.
But then I'll say there's some that's not income tied.
Okay.
So I bought a house 3 years ago. My salary was over $58,000, and I was able to get $15,000 down payment assistance.
Well, you need to tell us about that too. Where did you go to get that $15,000?
So
You're holding back now.
As Felton mentioned, 80% of us live in communities that look like us. Those communities are what's considered low to moderate income communities. They have what's called low to moderate income census tracts. Let me say this, even Oak Park, that has a $95,000 AMI, has low to moderate income census tracts. So if a home is purchased in an LMI, there are some institutions that offer down payment assistance regardless of your income for those areas. I live in North Austin.
So how do we check these areas? Like, what's a website you can give us?
Actually, my staff or the lender can put in the exact address and the zip code to find out if it's an LMI community.
Interesting.
Or not even community, but an LMI block. LMI census tracts are literally block by block.
Gems. I hope y'all paid attention to that. All right.
Just you got to remember, you got to ask the question, is it an LMI? LMI stands for low to moderate income census tract. And even some of there's LMI tracts in Flossmoor.
Okay. Okay. South suburbs.
The south suburbs, right.
Okay.
Yeah, in the south suburbs. A lot of them in the south suburbs that people are not aware of. You just got to be able to put that address in with the zip code. But you talk to your lender or HUD Housing Counseling Agency. They have, I don't have the website. I should have had my staff here. I'm sorry.
It's all good. Google's our best friend. We will find it. All right, so let's move this conversation. Let's talk about NACA. Dre, you have house hacked your life away and have 7 figures in real estate, all because of the NACA program. Congratulations, first and foremost.
Appreciate you.
We love to hear it. Talk to us about the NACA program. Tell us the good, the bad, and the ugly. what do we have to do to get prepared? Because NACA could be painful at times. It could take forever in a day.
It can be very painful. My best advice to people most times is be prepared more than anything. Like she was saying, a lot of people, you feel like you're ready. You're so thirsty. I can say thirsty because we're in Chicago. Y'all know what thirsty mean. You're so thirsty to, you know what I mean, get a deal done that you don't really like do what you're supposed to do as far as your documentation, having up-to-date check stubs, like really sending in all the stuff that you're supposed to do. That's the number one hiccup that I see with the NACA program, and it frustrates people because they'll be like, yeah, send me your check stub. They'll be like, I just sent you my check stub, but yeah, you didn't send us your most recent check stub. Every time you get a check stub, every time a bank statement comes out, every time a piece of information that we require comes out, you need to be uploading it into your file automatically without us having to ask you for it. Because let's say you gave us March's bank statements, but you skipped April's bank statements, but you gave us May, but you think you gave us April. Now you mad because you think it'd be a whole lot of confusion going on, and people just really have to have their documentation and their paperwork in order a lot of times. And just understand, man, like it's gonna be a process. It's gonna be regardless, like she's not, whatever, buying a $300,000 or $400,000 property is gonna be a process. My best example that I try to give people is with the NACA program and just low down payment programs. It's like this. Especially with NACA. Most times, you're not coming all the way ready. Your credit score ain't where it's supposed to be, your debt to income, none of that stuff, but these people are still willing to give you a chance. So imagine if somebody, a complete stranger, came up to you and was like, hey, listen, I would like to borrow $300,000 for you. My credit ain't good. I ain't making a whole lot of money in my job, but I just want to buy this property, man, and I don't want to get the money from you. How would you feel about that? You know what I mean? Like, even if they were to tell you yes, they would have to do extreme due diligence to make sure that you're going to be able to handle this amount of money and you're responsible enough to go do what you say you're going to do. And it's the same thing with NACA.
So tell us the breakdown of the NACA program. Minimum credit score, what exactly is it? What do they offer?
The last time I went through NACA, they didn't require a minimum credit score. It was just about your debt to income. You know what I mean? As long as you don't have any collections in your name, things like that. Pretty much with NACA, if you can pay rent, you can pay mortgage. Like that's what it is. So that's how they'll qualify you based on how much rent you pay, how consistent you are with your rent payments, things like that.
So with the NACA program, you was able to buy multifamilies, right? Let me ask you something, Felton. The Dream Maker program, can you use that with multifamilies?
You can. Yes, up to 4 units.
Up to 4 units. Right. And what's the down payment for that?
So once you go north of 2 units, the down payment increases to 15%. We used to have it at 5%, or I'm sorry, yeah, 5% down. Right now on a single family it's 3%. However, new product alert, so we're going to be doing a facelift to that too. That will do 2 things. One, adjust the AMI or the AMI to 110%, which is going to capture more people. Second, we're looking to back down the minimum down payment. Most likely be about 5%, but that's probably in the next, 2023.
Nice. So 15% for multifamilies, 3% for single families with the Dream Maker.
5%, or 3% down, or 5% depending on FICO score for single family.
Okay, so 3 to 5% for single and 15 for multi.
It's still a conventional loan, Fannie Mae or Freddie Mac. Private mortgage insurance is at a reduced level, so it makes it more affordable. No prepayment penalties, of course, and it's an easy program to get qualified for.
Dope. Dre, house hacking. You house hack your properties right now. You're doing not just Airbnb, but you're also doing peer space as well, right? Yeah. Can you break that down for the audience? Because a lot of you guys own homes already right now, right? Yes, no, maybe? Oh, okay, good. Y'all gotta wake up, man. All right, so talk to us about peer space and what your motto is and how you've been turning a profit with that.
Well, peer space, you can do peer space whether you own your property or not. That's the good thing about peer space. And essentially, if you have a nice space or you can decorate your space nicely and make it desirable to where people want to maybe host a dinner party, do a photo shoot, do a video shoot in your home, it can be profitable. And one of my NACA properties, not only am I profiting off the rents, living in one of the units, but the unit that I live in also checked probably a $2,000 a month bag just off of peer space with me living in it, on top of the income from the 3 units in front. Bucktown.
So wait a minute, hold on. So you're making 2,000 for one unit,
that I live in.
the one that you live in.
Yeah.
So what are you offering in your house that you live in on
So-
Pear Space?
So,
Like, cause I'm like, like, yo, y'all need to get your mind out the gutter, yo. Y'all are crazy. Pause, man. Pause.
so it's not like an apartment or nothing. It's like y'all know Bucktown, Wicker Park neighborhood, right? So it's busing up there, and it just so happened that again another Chicago word. Y'all know what busing, man. Yeah, it's busing up there. So when I went through the NACA program the first time, the second time I did Divide and Conquer with my ex-girl or whatever. So I knew the program really, really well. And there were some things that I found out about the program after I closed on my property. I'm like, oh, we can really like go crazy this time. So I started looking into nicer neighborhoods. I started finding out what the maximum was, and as long as the rents that the property is already generating covers the mortgage, you could afford it. And NACA's main thing is to balance out communities. So they'll let a poor person go buy in a rich neighborhood, but they won't let a rich person go buy in a richer neighborhood. A rich person will have to go buy in a lower income neighborhood or a neighborhood where the median income is less than what they're making. So they allow me to go with my $25,000 a year making ass after taxes. Yeah, I was living in poverty essentially. Like I was under the poverty line to go and buy a 4-unit property in Bucktown with a 0.8% interest rate.
You said 0.8. You would better never sell that house.
Ever.
That's free money.
All day.
And so now you Pear Space this house.
Yeah,
And you make $2,000 a month while living in it. So you live for free.
essentially. I mean, I've been living for free since 2015. I haven't worked since 2016. Real estate essentially has changed my life. It's given me the freedom to walk away from my job. In addition to me walking away from my job, I have a brand. I'm an author. I travel and do public speaking, podcasts constantly, man, interacting with people, telling them about how real estate can change their life. And at the end of the day, the main thing, it only takes one deal. You don't have to have 20 doors, 50 doors, none of that. My first property, it allowed me to walk away from my job. So this is how it happened.
Break it down, bro.
So
We need to know.
with the NACA program, I went and got me a 4-unit. And it was amazing because some of the benefits of NACA are no money down, no closing costs. They pay for your agent. They pay for your attorney. In addition to all of those things, you have the option to buy the interest rate down with being offered the lowest interest rate in the country already. You won't find a lower interest rate than NACA. Y'all could bet whatever. Like, you won't find a lower interest rate than NACA right now. You know what I mean? And the fact that they allowed me to buy it down was amazing. So I think the interest rates at the time were like 3.5%. On that one, I bought it down to 2.5% because I was able to get a seller's concession. So I got a 4-unit property in a neighborhood called Forest Park, which is right next to Oak Park, another really good neighborhood I'm sure y'all familiar with. I know my neighborhoods. I be shopping right. Like, I don't play. Like I'm not gonna settle for I took advantage of the program to the max. So like I said, I got a 4-unit. 3 of the units were already occupied, and there was one available for me to move in. The program is so amazing, y'all, because I walked away from the closing table with all of the money that I had saved up throughout the process, which was about $15,000. The seller's concession allowed me to buy the interest rate down, and it was also more than what I needed. So I walked away from the closing table with an extra $5,000 on top of the money that I had saved. In addition to, I closed at the end of the month, got the keys to my property, moved in, became financially independent where I didn't have any more rent, bills, or anything hanging over my head. That same day, rent checks started coming in because it was the end of the month. I got paid that day, so I went from making $26,000 a year to having $26,000 cash in my account and having a property that was worth $375,000 that I had only paid $330,000 for.
Woo. Damn.
So I had cash, I had great credit, and I had equity on my first deal.
When is he going to drop the mic and walk off the stage?
Yeah. Certified gem dropping next to you, brother. That was a lot of gems in a short period of time. Tooks, clip that up, please. We got to clip that. All right, let's open it up for some questions. Anybody got any questions? Please stand up. Go over right there to where my guy Will is standing next to the camera. You have a microphone right there. I want to try to get as many questions as possible for our panelists, because they got a lot of good information. But I don't want to keep sitting here talking to, what I want to hear. I want to hear what you guys want to discuss. Is NACA income-based, Dre?
Yeah, but only for
Talking to the
high
mic, talking
income-
to the
only,
mic.
Mainly for high-income earners. What they'll do is make you a non-priority member, but you're only a non-priority member if you're trying to buy in a neighborhood, like I say, that's higher than what the median income is. But if you're trying to buy, let's say you make $500,000 and you're trying to buy in Inglewood. Oh, it's a breeze. They're gonna let you go in Inglewood all day long. But if you try, that's not the best neighborhood in the city. But if you were to try to go to, like I say, a Logan Square with you making $500,000, they will reject that because essentially, like, all right, that's not balancing any neighborhoods. You're just adding on to the wealth that you already have. They want to, like, balance everything out where communities are like, all of the value and property value is not just on the north side. They want it to be like where there's property value in Bronzeville, there's property value on the west side, there's property value everywhere. So that's why they want you to buy all over.
Love it, good. All right, so we're going to take questions. Please state your name, but also please don't ask 7 questions in one. There is a long line of questions, and I want to try to get everyone's questions, okay?
EYL rules apply, guidelines.
Okay.
Guidelines, please, guidelines, please, guidelines. Queen, please introduce yourself and ask your question.
Okay, first I want to say thank you so much for all the information and the light that you all share with us every day, every week on your podcast, on your YouTube and that kind of stuff. So thank you.
Thank you for
my
supporting.
name is Dervella. I am from Chicago. I'm a North Side girl. Y'all forgot about us.
Oh, North Side. Shout out to the
Yes, sir.
North Side, okay?
And so, well, Dre, you just helped me. I was trying to figure out which would be better. I am working with NACA now, so I was trying to figure out if NACA or Legacy Homes, I heard you mention this, MG, would be better, but you just helped me, so that's done. So my question would be, with the market, what I've been noticing is that either I have an option to buy low and end up rehabbing that property, or should I buy high? We know everything is high right now, and that's already rehabbed. So, for example, I've been noticing if I buy low, then you still have to fix that basement. You still have to do some cosmetic and some other stuff to it. That's one way. Or the other way, again, pay the $800,000 with having whoever gonna help pay my rent that's living in there, right? And then I'm living in one. So which one right now, this is my dilemma, would be beneficial to me?
Anyone can answer this on the panel.
I think it more so depends on what you're looking for. So even if you were to buy, because it's not extremely high like how it was months ago, things have come down a little bit, they've cooled off some. But when you're buying investment properties, my main thing is cash flow. So if it's cash flowing and you got that monthly income coming in a substantial amount, the market gonna go up and down, it's gonna fluctuate, but cash flow don't stop, like it's consistent, you know what I mean? So at the end of the day, I would be more so focused on the cash flow than the actual, like, the up and down flow of the market, because it's gonna always do that. And there's never like, oh, you gonna catch the bottom, you know what I mean? You don't know when the bottom is and you don't know when the top is, so just buy and hold it, because at the end of the day, if you hold it for 30 years, it's gonna go up.
Athena, go ahead.
Yeah, so I would just like to add my comment or suggestion. It really depends on what you have the wherewithal to do.
Agreed.
So if you have the wherewithal to, because I'm a firm believer in cutting out the middleman, I will buy the regularest property in the nicest block and take my time and fix it up and keep my equity. Because sometimes you can buy the best fixed house, and we work with inspectors, they'll say it's nothing but a pig with lipstick. You get in there and spend that money and you still got to do work to it.
Facts.
So that's just my personal comment. So it really depends on what you have the wherewithal to do.
Agreed. Felton, you want to add something to that?
No, I think both are great answers. First of all, if the rehab is the route you want to go, make sure you got the right product. Yep. A lot of lenders may not offer a rehab loan, and if so, you're going to pay through the nose for it, right? Because that's a high-risk loan. The other piece to it, though, if you're going to go down the path of the $800,000 or buy high on the north side, right? So we got grants over there too. We can help. Not as may do a little bit of a dent, but again, it's going to be about what your resources are, what your motivation is. What do you want your end game to be? Could be buying high, holding on to it, pulling some equity out, and then do a combination of both.
Love it. Love it. Next question.
Hi, guys. Thank you so much for all the information. My name is Glomery. I'm from the Bronx, New York.
Shout out to the Bronx.
I've been living in Chicago now for 3 years. I am a homeowner. I got the FHA loan in March and I closed, so I'm a Section 8 landlord. So my question is to Andre. Would I qualify for the NACA program? Because I thought that you could only do that once as like a first-time home buyer.
You can. So the second way, like I said, I was a divide and conquer thing. I was with my ex-girlfriend at the time, and I just took her back to do the program as well.
Oh, okay. So, okay, that's your answer?
Yeah.
I was about to say.
Yeah, so you could do it with, it doesn't have to
real.
be, it doesn't have to be somebody you're in a relationship with. You can do it with your mom, your brother, your sister. Like, it just so happened that that's the person that I did it with. Yeah.
Okay, got it. Well, thank you.
No problem.
Oh, my
So,
Lord.
oh, she left?
Go ahead. Go ahead.
No, I was just going to say, in theory, after you buy your first property, when you buy your second property, it's going to call for more down payment assistance. But so in my world, outside of being an executive director, I buy properties too. But you set up your business, partner with a CDFI, get a line of credit, and you start buying them and selling them that way.
Love it. Next question, please.
Hello, everyone. My name is Hannah Neely. I'm from the South Side of Chicago. Super excited to be here. So I have a quick question for Andre, and it's about the NACA program. I actually went through the process to try to get pre-approved for NACA, but they told me that you had to live in the property for at least 5 years in order to qualify for the loan. And then they also made it seem like you couldn't be like an investor. Like they were basically telling me we want this program to be for people who are really looking to own a home and only be in that home for the rest of their life. So how were you able to, just take advantage of that program and become an investor off of it?
Finessing. It's just
And see, I know how to finesse, but I need to understand. Can you break down the finesse?
Everything is a finesse, man. It's and it's a legit finesse though. I'm not saying that in a bad way. You know what I mean?
All right, so let me answer this question, Trey. Hold on. All right, so what you have to do is...
Yeah. So he finna tell you the proper way to do the finesse.
Yes, let's go.
Yeah, there's a proper way to finesse, okay? So, and this is for everybody. When you have to watch the words that come out of your mouth. If you go to Chase, NACA, any bank, and you say, I want to buy an investment property and use your low down payment product, which is designed for primary residents, you are trying to commit mortgage fraud. We at EYL University, JP Morgan Chase, do not condone mortgage fraud. Where's the camera? Camera, please. We do not condone mortgage fraud. So watch your language. What you have to say is, I am looking to purchase an owner-occupied multifamily home. You have to take investment and primary residence out of the same sentence. It is an investment property, but it's an owner-occupied multifamily, and you will not have no issues. Your intent is to live in the house for 12 months, 5 years, whatever that program guideline requires, and that's what you have to say, that you're going to live in that house, because you have to go live in the house. So I will never be on the internet telling you to say you're going to do it and not do it, because I don't want you to go to jail, because the streets are always watching, especially on the internet. So, does that answer your question, Hannah?
Yeah, it does.
Okay.
Finesse. I got it.
So essentially, like what he said, So essentially, like what he said is,
Let's cut Dre Mike off now, please.
Moving the property, but that doesn't mean you can't buy other properties. You just still live there, and you just go invest in other places.
keep
That's
investing.
it. That's the finesse. Like ain't no illegal, nothing. Like, there's no mortgage fraud going on. You just go use your end. So, for example, I'll tell you what I did. So I moved into my unit. I saved all of my money for a year and a half because I kept my job after I got it, even though I knew I didn't need it no more. I saved every single dollar. I saved it up. After that, I was like, all right, cool. I'm in a position where I can leave my job. I went and started my businesses. I started investing in other properties. I started doing different things after I was put in position by the NACA program. Like, there's no mortgage fraud involved. It's just a finesse.
Gotcha.
So I agree with that, 100% facts. But I would say if you're trying to buy investment properties and you know you're not going to live in there, just structure it properly. Yeah. You're going to have to come up with more money, period, point blank. You're not using a low down payment or no down payment loan. If you truly want to be an investor, you need money.
Got it. And then a real quick follow-up question. I know a lot of realtors.
Guidelines. Hannah, you know I love you, girl, but guidelines.
So a lot of realtors actually.
Chicago.
A lot of realtors don't like to work with people sometimes when they are in the NACA program because they say it takes too long. So it's like, how do you convince people or realtors or sellers to work with you and actually allow you to purchase their home with a NACA mortgage?
It's all about your terms. It's all about your terms. Everything is terms and conditions. You have to put yourself in the seller's position. If you're coming with your NACA program or your Dream Maker and you putting a little bit money down and you want to pay lower than what I'm asking for, and you want closing cost assistance, and you want my firstborn, and you want the living room furniture, why in God's green earth am I going to sell you my house when I could just go with this cash buyer who ain't giving me no headaches, right? So it's all about your terms and conditions with anything in life. It's all on how you negotiate. So if you're using these programs, you better make sure you have a strong offer, strong terms, and be able to close fast. Because as a seller, that's what we want.
And also an agent that knows the program and is familiar with the program and knows certain terminology, how to explain it to the seller's agent. All of those things can go a long way because those relationships and that lingo that they share with each other, that can go a long way because they can, transfer something to their seller and make it make sense to them as opposed to it being like, yeah, I got this first-time home buyer. They trying to come and buy your crib for the low. And it's like, nah. But if the agent come and talk to them the right way and let them know, hey, I have a first-time home buyer. They're working with this program. They're willing to pay your title fees. There's benefits that are for the seller when it comes to NACA as well. It's not all buyer benefits. NACA takes care of some stuff for the seller as well.
Dope. Next question.
Real quick, we do have a couple real estate agents, real estate professionals in the room. So in the back, in a jersey, says Realtist on it. Shout out to Gwen and Sydney. So if you got some questions for them as well, reach out, connect. They'll work with you.
Shameless plug.
Miss Gwen Newton.
Love it.
In the house.
All right, next question.
Hello, I'm Miles Williamson. I'm from Columbus, Ohio. I was just wondering, is NACA program a national program? And if not, is there anything similar to the NACA program that is national?
Yeah, it's national, nationwide.
Thank you.
Next question.
Good afternoon, everybody. My name is Chanel. I'm from the south side of Chicago.
South side.
South side. So my question, I guess it's a little personal. So in my, I have the money saved up. I have a low debt-to-income ratio. My biggest thing is the interest rate right now. So I don't know if this is per lender, but with the mindset of, okay, I want to stop paying somebody else's mortgage and, get into my own home or multi-unit and develop that equity for myself, is it smart? I know we, can't predict the interest rates for real estate, but is it smart to go ahead and purchase now and maybe potentially refinance with a lower interest rate, or try to hold off to see what it would be next year, or what is your professional opinion about that?
Felton, you answer that.
Yeah, so good question. I'll give you something really easy to remember. Marry the house and date the rate, okay? So
I like that.
when you think about what your budget is, and you'd be surprised, although the interest rates have ticked up a bit, they're starting to settle a little bit. If that payment is going to work well for you when you include taxes and insurance and all those other pieces, If it makes sense, then go ahead and pull the trigger, you know. You can always look at refinancing later when an opportunity presents itself. I don't think these rates are going to stay where they're at, in my opinion. I think if we can make it through the next 4 or 5 months, we'll be okay for the next 5 years, right? But your home hopefully should be appreciating, and you can use it as an asset.
Okay, and your 4 to 5 months, you're predicting that the rates are gonna go down?
No, I'm not predicting, I just believe.
Okay.
I woke up this morning and there was a bird on my...
So look, I'm gonna tell you this, right? When it comes to interest rates, I would say I wouldn't even focus on that because who knows? In all honesty, the market is so crazy, so you really don't know what's going to happen. I don't think anyone should buy a house with the thought process of saying that I'm going to refinance. If you can afford it, you can afford it, and if you can't, then you need to sit on the sidelines until you can afford it, right? So don't buy nothing, because there's a difference between eligibility and affordability, right? A bank will give you a loan in a heartbeat if you qualify, but doesn't mean you can afford it. And what's going to happen, even if interest rates go down, you have to always remember there's two things that's always going to increase your payment: your property taxes and your homeowner's insurance, your escrow. So your payment may be $3,000 today, but a year from now, 2 years from now, it could be $3,500 because your escrow went up. So I think even if you were able to refinance and rates got lower, you still might be in a higher mortgage payment than you are because of the escrow. So again, worrying about affordability, I think, is the most important thing when it comes to home ownership. And if there is an opportunity to refinance in the future, which I think there will be, my prediction is when a new president comes in, because they're going to have to kickstart this and start lowering the Fed funds rate again to restart everything. So that's my prediction. I'm predicting that. But I will say just make sure that you can just afford whatever you buy today.
Okay, thank you.
And another way to look at it, if, you know, with these gas prices that went up recently, that kind of settled a little bit. If you need a car, are you shopping for gas prices? You still gonna need a car, right? Same thing, you need a place to live. So you have to think about it. If it's gonna line up with your budget, you know, go ahead and do it.
I think I'm gonna steal that line too. I like
Thank
that.
you, guys.
Next question. Thank you, Felton, for my next tweet.
Good evening. My name is Nick Price. I'm a real estate broker and investor with Coldwell Banker. To add to what what you guys gave her, I would say if you're spending over 30% of your household income in rent, yeah, you definitely should look at buying. That's another way to look at it. But question for Miss Athena and Felton: how can I become a preferred lender with you guys? I took your Miss Athena. I took you guys' orientation about 4 years ago, so I love you guys' program. And for Mr. Felton, question: are the programs that you guys offer at Chase, do they accept properties that need renovation, rehab?
Yeah, well, think of it like this. The home needs to be free of health and safety issues. You need to be able to cook a meal, take a shower, sleep, do all the normal things every house should do, right? You buy a car, you should be able to drive it off the lot. Same thing, right? We don't have a rehab program where, you know, things don't necessarily work the correct way. And the reason why, we had one years ago, but we found that people were not putting the labor and the investment into the home to bring it home on livable conditions. So, yeah, the first part of your question is that we have an incredible program called Chase Agent Express. And so if you're a real estate agent and you meet that criteria, we get you signed up. And as our clients seek a real estate professional in the area that you cover, we match you two together. Think of it like the union, right? So, or I like to say a country club, right? So we get enough of the right real estate agents, real estate professionals in that country club, and they work really closely and very well with those clients that we send them. But we don't want to overflow it or overfill it with real estate agents, because it becomes what? The YMCA, right? So great program. I got some loan officers around the room, or you can connect with me after. We'll look at getting you signed up.
To become one of our preferred partners, just call the office and you have to go through it's called our Industry Professional Partner Program. And it's pretty much just like an interview process. We show you how to do what we expect through HUD to do the presentation to our clients, and then it becomes referral process. So just call the main office.
Next question.
Y'all are dropping gems. Josh Ranson, Bronzeville. I was up here before. Andre, I got a question for you because I'm a big advocate of house hacking. That's how I got started in the investing game. The NACA program was, I mean, that sounds amazing. I didn't have the opportunity to use that, but as you were kind of going along and continuing your house hacking journey in terms of building out your portfolio, it sounded like you might have used NACA more than once. Did you refi, or like what other products or mortgages did you use when you were building out your portfolio house hacking?
So that's what I was saying. Like I just took my ex-girlfriend. Like yeah, yeah. Like it just. Yeah. So I took my ex-girlfriend and we did it. And after we closed, what ended up happening was I just mainly gave her a big chunk of money, and we put my name half on the deed.
Sure.
Yeah. So that's how it was.
So basically it was just straight
He
NACA.
finessed it.
Legally.
Look, divide and conquer.
Exactly.
Divide and conquer.
I appreciate it.
Yeah.
Next question.
Hello, my name is Shauna. I'm from the south side of Chicago.
South side.
South side in the building, heavy.
So my question is, like when we talk a lot about credit and how to do different things and how you want to keep things in your business name versus your personal name, is there a way that you should be buying properties with your business name, or do you buy everything personal and then go through a process of trying to transfer it over? Do you keep it in your personal? How does that work with your properties and keeping your business and your personal separate?
Who's this question for? Anybody? This question is for
Oh,
anybody?
anybody that can help me out, because I don't know.
What are you trying to do? What are you trying to do? Just put your properties in your business name?
I think it's more about like protection. Like someone told me that like each of your investment properties should be in a separate LLC in case like a tenant has an accident or needs to sue, for some type of reason or whatever, that if you keep them separate, that somebody can't go like after all of your properties or all of your assets if you keep them all separately.
Correct.
So I don't know, like, how do you acquire them in a business name, or do you acquire them personally and then try to separate them so that
it
they're
depends on what you're
protected?
trying to do, right? So if you're trying to house hack, then you can't put it in your LLC. It has to be in your personal name. And then when you move out of the property, and you have to be careful about this, because if you transfer your properties to an LLC, you could trigger what's called a due on sales clause, where the bank can now say you owe us money because you transferred ownership of the property without our written permission. So you got to be careful. I know the internet will just tell you transfer it to the LLC, but there's rules and regulations behind that. And when you sign at the closing table, you're signing that you are not going to transfer ownership without their permission. So just be very careful, especially when you're using like FHA and like Fannie Mae, Freddie Mac loans, and you did 3.5% down or 3%. So be careful about that. So if you're not house hacking and you're buying true investment properties, then I would highly recommend just buying them in the LLC name. That way you're not touching your personal name. And it's very easy to get qualified in the LLC name. The property just has the cash flow. So it's not a drawn out process like you buy using a traditional mortgage. So that would probably be the best way to do it if you're trying to buy true investment properties and your intent is never to live in those properties. Just do it in your LLC from the beginning.
And then that way your personal is not an issue at all.
Correct.
It's about the cash flow.
It's different LLCs. Every property has an LLC. And an LLC doesn't have to be a brand new property. I mean, a brand new LLC. Oh, no, it doesn't have to be an established LLC. It could be a brand new LLC. So you can open up the LLC today and get in contract tomorrow and get approved for a loan.
Thank you.
You're welcome. Did y'all know that? Well, I just told you. What happened? Say it again. Okay, this is not my show, okay? I'm just the moderator. But I will tell you, if you want to buy a house in your LLC name, it's very simple. 660 credit score is what you want to have for your personal, because the banks that offer these products will have you personal guaranteed, right? So although the mortgage will not show on your credit report, you are personal guaranteed. So if you stop paying, then they could come after you personally. But when you buy the property, again, the LLC could be a brand new LLC. It doesn't have to have established business credit. It doesn't need to be in business for 2 years. It's all about the cash flow of the property. It's all about the DSCR, which is the debt service coverage ratio, which that is the equivalent of your DTI when we're talking like residential properties. So these loans are underwritten like commercial properties. So again, cash flow is king. We're not using Airbnb because I know a lot of people are now moving towards Airbnb versus long-term tenants, but we're going to always use what's the long-term market rent. So even if the house, the realtor might tell you, hey, this apartment is getting $2,000 a month, but if that appraiser comes back and says it's only getting $1,500 a month, we're going to use that lower number. So you got to make sure when you're going after these loans that the numbers, the rental numbers you're using is accurate. And you also need to make sure you're accounting all your expenses too, because we're looking not just at your property taxes or your homeowner's insurance, we're looking at CapEx expenses. There's a lot of different things. It gets a little more deeper, and I don't have much time to go through all of this. But what happened? I'm giving you as much as I can here, brother. But it's an easy process. You know what I'm saying? But yeah. Talk to me at the booth later, and we can kind of go into a little bit more details about that. But I want to take the focus back to our panelists. You guys did an amazing job. Give them a round of applause real quick. And let's go down the line. You know, parting words, how to find your organization, and whatever else you want to say to this audience before we get out of here. Athena, start with you.
How to find the organization. The Chicago phone number is 773-887-5187, 5934 West Lake Street. Website is oprhc.org.
Say the number again. Say the phone number again.
Wait.
Say the phone number again. It was kind of slow.
773-887-5187. The website is oprhc.org.
You got that?
And
one more time. Let's repeat it one more time.
773-887-5187. oprhc.org. 5934 West Lake Street, 60644. And if I could just drop a couple of things.
Go ahead, drop your gems.
People, so first of all, I just want to say this. The black home ownership rate is only about 40%. We're lagging behind everybody. And we want, through my leadership at this agency, the goal is to really increase black home ownership. And I just want people to be patient, but get into the game, get your paperwork ready. If you're already on a home, we do foreclosure prevention. Just saying. And again, take your time. Do what you need to do. Our counselors are there and available for all aspects: financial education, home ownership, foreclosure prevention.
Love it. Felton?
Yeah, first I want to say I appreciate everyone coming out because this is an amazing opportunity. And so hopefully everyone will have some great takeaways and do something with the material and the information that you got today. But, you know, obviously Chase is everywhere. The focus for me is south and west sides, but I go everywhere. My name is really simple, Felton Ellington, so felton.ellington@chase.com. Facebook and LinkedIn, I don't have all the other fancy stuff, but I talk a lot. I'm always willing to help people and answer questions, even if it's not an opportunity for us to do business together. So appreciate all your time.
Dre?
Man, I just want to say, less than 10 years ago, I was living below the poverty line. And now I'm on stage talking to y'all about real estate and how to build wealth. It starts with one property. That's it. You get that first one, I promise you, and you do it the right way, you listen to this information, you apply for these specific programs that are going to help you, programs that are going to put you in the best position to win, that one property is going to change your life. You got any questions, you can find me at Renaissance125 across all social media platforms. DM me, my website, www.therenaissanceu.com. And again, y'all, it just take one. That's it. And it's going to change your life from there.
Love it. Let's give them a round of applause.